Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, it's been a very whipsaw price action for the Australian dollar after retreating from the highs around 70.45.55. The market plummeted back down towards the region of 69.55.65. And from there we saw a brief rebound as the market got the numbers to the Australian jobs. That is, the Australian Bureau of Statistics report for the April unemployment came in at 3.9% as forecast, against a 4% previously. This is the lowest Australian unemployment rate since the early 1970s. The overall change in the employment for the month was around 4,000k instead of 30,000 forecast. Full-time employment increased by a whopping 92,000k, while part-time jobs decreased by 88,000. With these numbers, it is expected that the RBA's path to lift rates could exceed to around 40 basis points, as much talk is expecting to see a rate rise to 0.75% as the RBA meets on June the 7th. In the present pattern I'm seeing from the Australian dollar is that the RSI is still remaining somewhat positive against the MACD, which is just broken over the zero threshold, which also supports a bullish case, and therefore I do expect to see the market retest the rejection area of around 70.45.55 and reassess from there. The euro also backed away on Wednesday as the US dollar index, which measures the greenback strength against a basket of 6 major currencies, takes a challenge back towards the top side of the range around 103.80 to 104 the figure. Meanwhile, the euro did tumble away from the objective that I was looking for, 105.60.80, however finding support now around 104.50.55. Do keep an eye on these technicals because they're somewhat like the Aussie and holding relatively firm. So therefore, I'm not cancelling out or changing my view as of yet, and I do expect to see another upside challenge around that 105.60.80 and reassess. The dollar yen was heavier and still is since Wednesday as it tumbles now closer towards its objective, seen around 107.45. Heavy technicals do support this view, and therefore let's see if the market can take the challenge to this bottom side and reassess. The UK released its CPI numbers on Wednesday and they came in at 9%, which is the first time since April 1982 and pretty much matching up with the US 40-year record high. Looking at the current price action, it also is holding relatively well considering the overnight decline, and therefore could see a retracement back towards 124.40.60 area to around 125 to 126 as a broader target. I'm not going to get too negative at the bottom of the range while these technicals are still holding relatively well, and therefore could see a rebound from 123.40. Sterling Kiwi is a little bit weaker as it backs away from the highs of 196 and now nearly on track to see a further down test, and that is towards the region of 194 and reassess from there. Finishing up with gold, the market is somewhat weak since it backed away from that top side downtrend line, that is around 1,832 to 34. I do feel a close under the level of 1,805 would reinstate the downside challenge, and that is around 1,788 to 92, as the downtrend is still matching up with the negative technicals which support this view. Finishing up with oil, the market's reached its downside objective since the retreat from 113 to 114. That is at 106.40.70. A break or close under there would reinstate the downside and look back towards the $97 to $98 a barrel. Well, that wraps it for today. Thank you very much for joining me, and as always, look out the intraday port. I hope you enjoy the rest of the day.